crypto and DeFi markets really went through the mill for the most part of 2022. The TVL in DeFi shrank from over 176 billion in December 2021 to a meager 40 billion by the end of 2022. That said, DeFi has proven to be particularly resilient to the liquidity crisis that caused so much pain in the CeFi sector. And it hasn't been all bad news for blockchain projects and communities. There have been a lot of new developments and positive updates that make us excited to look forward to this year. So, what does 2023 have in store? What changes and new trends can we expect over the coming months? Keep watching and we'll discuss developments in DeFi and DeFi Insurance over the coming video. So, number 1, financial derivative products in DeFi. For those not in the know, financial derivative products are contracts whose values are derived from the performance of an underlying asset. This can be anything from precious metals to livestock, oil, or index derivatives that are tied to the performance of well-known indices like the S&P 500 or the FTSE 100. Some of the biggest names in DeFi derivatives include Maker, Synthetics, Perpetual, DYDX, and Barnbridge. These projects help facilitate the exchange of value as well as provide users the opportunity to speculate on tokens that provide exposure to the underlying assets without them having to buy them directly. Given the integral role that derivative contracts play in traditional finance, it should be no surprise that derivatives are a fast-growing sector in the DeFi landscape. The total value of the DeFi derivatives markets is around about $28 billion, and this compares to an estimated value of the derivatives market in traditional financial markets of over 1 quadrillion. So one might reasonably conclude that there's still a lot of opportunity for growth in the DeFi sector. User interest in these DeFi derivative projects soared in 2022, with Google searches going up over 500% over the course of the year. So, will this increased level of interest translate to a more robust DeFi derivatives market in 2023? Time will tell. Number 2 on our list, the rising prominence of DeFi insurance. So, after everything that happened in the CeFi space in 2022, custody risk and security risk are in the forefront of people's minds, and this could lead to 2023 becoming the year that DeFi insurance protocols see widespread adoption. DeFi insurance, after all, is about mitigating risk exposure. Basically, DeFi insurance matches users that are looking to earn income with DeFi and CeFi users that are looking to mitigate or hedge against custody and security risks. Blockchain-based DeFi insurance protocols help facilitate peer-to-peer cover by combining the funds of liquidity providers into cover pools to underwrite risks. Cover purchasers pay a premium to this pool and receive a payout based on the terms of the contract. A recent and exciting addition to the DeFi insurance space is, of course, Neptune Mutual. What makes our platform stand out is that it's a marketplace for parametric cover. This is a type of cover that has many advantages to discretionary cover. Parametric cover policies pay out in the event of a smart contract hack or custody incident that meets the parameters of the policy. So at Neptune Mutual, there is no assessment of individual loss, just an assessment of whether the incident triggered the parameters of the policy. If an incident does trigger the policy, then all holders of that policy can claim a payout. If not, then nobody can claim a payout. It's really that simple. Number 3 on our list, increased regulation. Many see that wherever there is a strong element of trust required to ensure user protection, as typically found in centralized blockchain business models, then it makes sense to apply the sort of centralized regulation and governance that has protected users of traditional financial institutions. The trustless nature of blockchain makes peer-to-peer transactions reliable without the need for knowing who the counterparty is or where they're located. This is the basis of DeFi, and in the absence of information about who users are and where they are located, it makes the geographic boundaries of regulation and legal jurisdiction challenging to apply. In the absence of industry-wide DeFi regulation, DeFi cover seems to be the most obvious and most immediate way for users to mitigate risk. Finally, overall, 2023 promises to be an exciting year for DeFi. That being said, it is important to be proactive with security and cover protection for your digital assets. Secure your favorite DeFi tokens and other digital assets against smart contract risks with a parametric cover policy that you'll find in the Neptune Mutual marketplace. Find a cover product, input how much coverage you want, and input whether you'd like 1, 2, or 3 months protection. You can check out our video tutorials to learn more about how to interact with the marketplace in the link in the description below. What do you think this year has in store for the DeFi ecosystem? Let us know in the comments below.